We're going to get rolling here today, and I know that we've got the grain markets a little bit lower, but when you take a step back and look at these markets as a whole in here right now, we got to ask ourselves, and this is from economy, is what's kind of hot out there, and especially when you have the inflation talk running the markets, and when you get towards the commodity markets, you really have the energy markets and the ag markets that are attracting all the interest, and if people are buying on inflation, those are a couple of markets that they're heading towards. The other market that is really hot or has been hot is the U.S. housing market. Now there's kind of a question, is that starting to cool off or not? And you can debate that for a lot longer than what we want to do this webinar for. But those are a couple markets out there that have been really, really strong. The one thing we've talked about in our daily report, though, before is are we getting commodity markets to the point where they're fully valued? And what we're looking at is on fully valued is kind of from an affordability standpoint, and that really applies to housing, energy with diesel prices pushing $6 a gallon, or even food prices. So there's an affordability part of are we fully valued or not? And then the other thing, too, what we're particularly noticing in the energy and the ag markets is do we not go up on bullish news anymore? And that seems to be the case. We're just not rallying when we get a bit of bullish news. That's another sign that things may be fully valued. But on our first chart we want to show you here, this is Chinese year-over-year housing prices. And what we want to point out is that we're seeing that go to a negative for the first time in the last 7 years. We talked about the U.S. housing market being hot. Things were strong in China as well. Now things are beginning to turn down. And I think it's important to realize that the Chinese, the property market last year was 7 times greater than the U.S. And when you look at the Chinese total real estate market, the value of that is greater than the U.S. stock market. So when China housing prices start going down, that's something we probably need to pay attention to from an economic standpoint. Our next thing here is a monthly crude oil chart, and very early on we talked about things being fully valued. Our 2 lines on this chart are up at 110 to 130. You can see in 2008 we traded above 130. But on the other hand, you have to start to wonder now if this is a range where crude oil prices are fully valued. We got some bullish news here recently, yet you can't go take out those highs from 2 months ago when Russia first invaded Ukraine. As we look towards the corn market, we put our lines between $7 and $8. You can see whether if it goes back to 2008, 2010, 11, 2012, this market went up into the $7 to $8 range here a year ago. And again now, is this a level that corn is fully valued at? When we look at beans, the bean chart looks pretty similar between $15 and $17. Maybe on Chicago wheat, we're reaching a bit here. I'm saying we're fully valued between $11 and $12.50 because you only have that spike high going back to 2008. But again, recently, we've kind of gotten some bullish news, and except for new crop D's corn, we have failed to make new highs. And that's telling us that this market might be struggling in here at these current levels. Now, as we want to wrap things up, we think that there's there's always a lot of question marks, but the one right now is the economy slowing down. You've got the equity markets breaking. The S&P is close to 20% off of its high. And then recently, or just last week, you had retail stocks, whether if it was Target or Walmart, that really dropped off substantially as consumer demand is starting to slow. As we get towards the ag markets, every day we want to talk about some crop issues, whether it's the Northern Plains or Canadian Prairie, EU with France wheat, second crop corn in Brazil, China being a little bit dry in their Northern Plains. Those are things that seem like they're out there, the last 2, 3, 4 weeks, yet we don't surge into new highs. So that kind of leads us towards, are we fully valued again on these markets? Now, the big wild card remains the war. Okay, food security is definitely a talking point right now. And the one thing when it comes down to the war, what we're starting to see, and this is from the UN, and talking about the price of food and food availability out there right now, that's really becoming a huge talking point. And that reminds me going back to '88 when the drought showed up in Time magazine and here, and then the markets peaked at that point. This whole food security issue right now has us wondering the same thing. Now, is it time to make some more new sales? We like getting rid of the rest of the old crop corn. we think we're at a point in here right now where you probably need to push ahead some new crop corn, bean, and wheat sales. If you're looking at price protection, maybe consider puts. We know they're expensive, but a $14 November bean put at 35 cents seems like it's fair buy. The other thing too is looking ahead to 2023. Right now, 2023 corn's around $6.40. 2023 beans are around $14, and you've got Chicago wheat at $11. Those are good values there to protect, even with the higher input costs. Any questions or concerns with these markets or have some suggestions, drop us an email or give us a call. Thanks for tuning in.